The following interview segment was taken from Talking Wealth on flix.net. That's FLIXX.net. Talking Wealth is brought to you by Wealth Within and presented by Dale Gillham and Janine Cox. To watch a full episode, go to flix.net and click on Talking Wealth under the business and finance sections. Or for more information, visit wealthwithin.com.au. Michael Dominguez, welcome back to Talking Wealth. How are you today?
I'm fantastic. Thanks for having me again.
Yeah, it's good having my Canadian buddy on the what do you call it? We can't. It's technology, isn't it? Like our meetings all the time nowadays are all on video. I mean, I'd love to be over there having a beer with you and chewing the fat and maybe having a couple of coffees and going to a nice steak dinner with you and really getting into your head and having a good chat, because I love meeting people. Especially in the investment and wealth creation area. So, and I'm sure you do as well.
Absolutely. It's you could spend an evening very easily having a good conversation about different sectors of the wealth building business. So,
yeah. Now, last time I talked a bit about your book, The Armchair Real Estate Millionaire, and I did ask you, why you actually wrote it, etc. And I know all of our viewers rushed out and got a copy of themselves, or I hope they did. They went out and got it on Amazon or the bookshops or whatever else to get it out there and get it in their hands, because it's full of fantastic information. Now, I did want to talk a little bit about it because we do have people not just in the North American market, but obviously there's Australians watching this show and there's people from Asia watching this show. It's amazing when you look at the statistics where people are searching for information. So I'd like to get into, how would your book relate to somebody who's not necessarily in the North American market?
Yeah, great question. So the reason why I wrote it for the North American market is simply this is the market I know better than any other. And one thing that is consistent across the world is market fundamentals. And that's the most important thing that I recommend for anyone. If you're just getting started and don't have any money, it doesn't cost anything to learn the market fundamentals. And so what I mean by that is finding markets that are available, let's use Australia as an example, or Asia, and does it have strong growth in terms of population? Does it have strong GDP growth? Is employment growing? And if you want to invest in a market, not one that's up and down, but one that's having a steady growth along the way, and that's universal wherever you're investing. So that's number one. But the reason why I focused more on the North American market is because in Canada and much of the United States, we have basements in many of our homes. And a lot of these 1,000 square foot bungalows you could add a 2-bedroom basement suite in there, and using the same footprint of a house, you can add that second house, which is a very convenient way to build significant wealth, because now you've got 2 rental incomes in the same footprint. In Australia, they don't have nearly the same number of basements for different reasons why that is, but the reality is it is what it is. And so, but one thing that's been happening more and more, because there's more of a push, and you could speak on this better than I can, Dale, but there's more of a push to do a little bit more densification. And so allowing granny flats and secondary suites as extensions to the current home. If you can buy a quality home in a quality neighborhood and then find that home that allows that extra dwelling unit, once you've done that, you can now have 2 rental suites and start to earn some significant money in that market. Asia, I can't speak on that market quite as well, but you look for markets where you can, in fact, generate enough rental income to cover your monthly expenses with a little bit of money to spare.
Yeah, you're so right. I'm looking at building a house at the moment on some land, and we were looking at calculations of do I do a 4-bedroom home or do I do a 5-bedroom home? Because to me, it's always about the long play. It's not just I'm building it now to live in it for a while, but when I sell it, what's the demand going to be like? And the difference between a 4-bedroom home and a 5-bedroom home is about $250,000 where it is. So, but it's not going to cost $250,000 to build it. It's only going to cost a few thousand, maybe 10 or 20,000 to build it. So looking at the market at what it wants, but also looking at how to add value to any property is really a smart thing, whether that's adding a second dwelling on it, like a granny flat, like you mentioned, or using the basement for another apartment, or splitting. I've seen houses in Australia where they've pretty much split the house in the middle and they've had two houses within the one house, just the way it's designed. So looking at how you can add value really does help you make money from it pretty quickly. Now, to get into my next question, I really wanted to talk a bit about, because real estate is really like the stock market and it has so many different approaches, from being short term where people just buy a property then flip it, to long term, what you're talking about, long term value investing. But fundamentally, for most people, it really is about value investing for the long term. Now, did you want to give our viewers some insights into your thoughts on investment property and the best ways our viewers can get involved in it for that value investing, rather than getting caught up in the flavour of the month, let's do this now, like flip properties or renovate? That was a big trend for quite a while, renovation.
Yeah, fix and flips, and I'm generally a pretty lazy person, and I don't really want to work that hard. To be fair, there is some work on the front end to get the unit the way you want, but even that's not necessarily always the case. If I buy I have bought turnkey duplexes that have already been done by the guy before me, and then as long as the numbers still work, that's totally cool too. But yeah, I'm not a big fan of doing major amounts of work on an ongoing basis. I want to rent to a tenant who's going to live there long term. I want to work as little as possible on my portfolio, and that's something I talk about over and over again. And I use some success stories, and unlike a lot of the books where you see these guys that are talking about how they bought 35 properties before they got out of bed this morning, and I don't want to do that. For me, I bought a quality property a year for 10 straight years, in some cases 2 or 3. And you buy this property, you get them up and running. And once they're up and running, you maybe focus on the next one, or you don't. And as little as 3 properties with an appreciation rate of about 4 or 5%, using the leveraging available through real estate. And a lot of people don't, when they're comparing equities with real estate, they don't always talk about the leveraging opportunities. And in Australia, for example, you can get a long-term mortgage with an interest rate at a sub-3 interest rate, and in some cases with an 85% leveraged loan to value. And you start thinking about that. You say, well, why would the banks do that? And the reason why is because it's such a secure investment that if you can buy this property and put in as little as 15 to 20% down, and then just hold on to that asset for 10 or 20 years, it grows not on your down payment amount, but on the whole value. If it's growing at 4 or 5% a year, within a decade, you've made yourself $1 million in wealth. That's okay.
Yeah, look, you are absolutely correct in that. I mean, Australians do have a love affair with real estate, and we can borrow high levels of, in terms of the loan to value of the property. And, and I've done it myself where I've, got one property and just bought another one, and the bank's just paid for the whole new property. And it's really about how much you're putting in and what are you getting out of it, and the risk as well. But all too often I find, though, people buying their home that they live in or that they want to live in, that's the one where I'm finding a lot of people are over leveraging. They're going really high into the 90% just to get a home, so they think, I own a home, but the bank really owns it. And they tend to, when you're getting into that 90% bracket of loan to value ratio, in Australia, they make you take out mortgage insurance, which benefits the bank, doesn't benefit you at all. It just says if you can't pay it, the bank's got their money. So they're really happy. And they're doing so with slightly higher interest rates. And to me, unless you're getting that growth that we need, then you're gonna be struggling for a few years to pay the mortgage, but also you're not getting much equity in that property if you're not getting the growth. Now, the USA is a little bit different than Australia. I think our growth rates are a little bit higher in property. Now, what's the kind of growth rate that you would look for in a property? Is it like 5.5% roughly, or 5 or 6%?
Well, and obviously, I'm going to sound like one of these mutual fund advisors when they say prior performance doesn't dictate what's going to happen in the future. But what I tell my people, I'm going to answer your question. Sorry, Dan.
That's okay.
what I tell my people is what was happening in the past 5 and 10 and 50 years in a market does not indicate where it's going to happen in the future. If you really want your crystal ball